Hey, Anthony. So today we want to touch on some facts about self-employment. Now, some people, the American dream, they want to work for themselves. They don't want to work for the man. They want the freedom. And they start their own business. They're self-employed. And then they find out there's some nasty surprises that aren't so great.
Oh, yeah. There's a bunch of things that happen when you go work for yourself. Basically, I think that people who are employees look at the IRS not as the nastiest thing in the world, but they're the people who will deliver you a refund check. So that's not that bad. But when you're self-employed, everything changes, and your view of the IRS might be a little bit different.
Right. You really are working for the man.
Pretty much. That's right.
Yeah. One of the things we want to talk about is the self-employment tax. You're paying quite a bit more when you're self-employed. You're basically paying double what you would if you were employed.
Right, and this is the way to think about it. When you look at your pay stub, you're saying, okay, I see I have some federal income tax withholding, and then you see some FICA stuff, and you're like, I don't know what that is. It's something, whatever. Yep. Well, there is a tax you're paying. You're paying your Social Security and Medicare out of that. You're paying half of it, okay? And you're paying half of it. Your employer is paying the other half. Okay, they're not telling you that. I tell people here because this is what we do.
Right, we're sort of experts.
Right. So most people don't know there's these other taxes that you're responsible for, and so this is typically what happens. The first year, someone is self-employed. Like, okay, it was an okay year, made some money. Hope it gets a little bit better. Some sort of amount of that, maybe not quite what they were making. As when they're an employee, then they're looking at their tax bill, but wait a second, this tax bill is the same, or it's more. What the hell's going on? This thing's telling me this can't be right. And they're going through, and I think I remember the first year I was self-employed. How do I know this? The year was 2003. Mm-hmm. I was like, well, before I got into tax, I was like, wait, this can't be right. Why do I owe this? And then a friend of mine who was subletting some property, who was an engineer, he's like, those are your self-employment taxes, buddy. Yeah. And did you pay your quarterly taxes? And I'm looking at them, quarterly taxes.
I have to pay once a year.
Right. It's like, and I was wondering who was going to pay the taxes on this. I was wondering where that was going to happen. I was doing real estate law at the time, or criminal. I was doing criminal law at the time. I was really clueless. And in law school, even though we took all of my dad and I took the tax classes, they never went to the practical part. Like, this is what's going to happen when you're out there in the real world.
Wow.
So here's the thing. On that April 15th of the first year you file your tax return, you're going to see a bill that's going to be more than you think it is. And you're going to think it's wrong, but it's probably right when you do it correctly. Mm-hmm. And so now you owe the IRS more than you think you do. Mm-hmm. And then what happens is, guess what? It's April 15th. That means your first quarter estimated payment is due. Mm-hmm. So that's one of the worst times of your life, that first April 15th of self-employment, because you realize, oh my God, I owe far more to the IRS. And not only that, I need to set far more aside each quarter for estimated payments.
Yes. Okay. So self-employment tax in 2015 was 15.3% on your first $118,500 of net income, then 2.9% on net income. Beyond that, you're talking 12.4% for Social Security, 2.9% for Medicare, and then 0.9% for the Affordable Care Act that you said sometimes applies. But
right, that's a surcharge. It usually hits on passive net investment income over $250,000. So there's some people that can be hit by it. Most people won't. I mean, if you're self-employed, you're hitting that, you're doing great. Mm-hmm. You're doing great.
Yep. Now, employees are used to paying about 6.2%.
Right. That's usually what you're seeing doing it. And it's more, and the thing is psychologically, it's done on a weekly or bi-weekly basis. And so you're kind of used to it.
Yes.
And the problem,
so you see the lump sum.
Right. And so that's the thing, is that you're looking at numbers that are much bigger than you are. And that first psychological, wait a second, I have a bank account that looks so good now. Mm-hmm. I need that money for business expenses, and that's where you say it's like you are working for Uncle Sam.
Yeah.
You're going to give it to them, or they're going to come looking for you. And and that's where you tend to see that people who become self-employed tend to look at the IRS a little bit differently than those who are employees.
Yes. And we also want to touch on the dates for the estimated quarterly taxes, just so people have the information. It's Form 1040, 1041 ES. And you are required to file this on April 15th, June 15th, September 15th, and the following January.
Right. And you notice something. there's something there it always sort of bothered me because it's quarterly, but April 15th.
Oh,
May.
yeah.
Wait a second. We went 2 months. So that's even the worst thing. It's like, okay, you just had the worst day, and now we're gonna accelerate the worst day
Yep.
by a month. If you notice that,
Right.
Right.
I never even.
Yeah, right. It's just so we sort of.
It's the IRS definition of quarterly. Yeah. And penalties, it's the IRS, so they do have penalties.
Yep.
If you don't pay enough, you can be charged a penalty.
That's right.
If you don't pay enough by the due date of each payment period, you may be charged a penalty. And there's, even if you're due a refund, I thought that was interesting. Even if you're due a refund when you file your tax return. If you're late, you will still get the penalty. And there's special rules for farmers and fishermen.
Oh, there always are, aren't there?
Yes, I love them.
I know they do have a great lobby there, right?
Yep. And the penalty, it's going to vary based on, lateness and all that sort of thing.
I think
But,
one thing we'll be talking about in the future, Attorney Bob Lyon, we want to talk about first-time penalty abatement. So for a lot of people who get this first-year surprise, usually that will apply. You just have to make sure that you are setting enough aside. And I would say, for our people that we represent who owe amounts to the IRS, the vast majority are self-employed.
Yep.
And so it's easy to get, you can see how easy it is to get on the path of not setting enough aside because you need it for your operations and people aren't paying you and you're paying taxes on money that you don't quite have fully in your possession because it's going to be out the door tomorrow.
Yep.
But the IRS says pay us first.
Pay us first. All right. Well, thanks so much for watching this video. Don't forget to like and comment below. If you have questions, leave it there and we'll get back to you. And make sure you subscribe to our channel. You can get updates about future podcasts, all sorts of good tax information. Thanks for watching. IRSMedic, the law offices of Parent & Parent, LLP. Real tax attorneys for tough tax problems.